So we have the economic calendar for the week. On Thursday, we have CPI on shelf. USD, we are on unemployment claim by 130. So from today, 1:15 p.m. today, Nigeria time, to tomorrow, 4 p.m., 4:25 p.m. Nigeria time, it's going to be busy for news. We're going to be for fundamental drive the market. So please be guided this week. If you can stay up the chart, it's good for you. But if you know what you are doing, it's also good for you. So that's the economic calendar for this NFP week, both Canadian dollar and the US dollars. So now we see that the economic calendar for the week. So let's see the chart for the week now. So from my end there, DSY, we start with DSY. DSY confirmation from daily time frame that we are still bearish on DSY. So what's our daily range? What's our range? Here is our range. Our range now is between 107 to 103. So price, this is where we want to trade. We want to look for trade opportunity. So from what we can see now, we have seen price giving us a clear shifting market structure. And then we see all this, we can title all this as our demand, as our supply, which we expect price to get to, and assume the continuation of the bearish. So this is my project for DSY this week, even as the NFP week. Another scenario we can see is price break, clear this low, then we have a further daily close below this 103, then we can continue bearish. So this is our projections for DSY this week. But the more that's more visible that price may likely react to is this upside. So now we have a lot of imbalance that's here that we expect, which we call the internal liquidity. So look at this, all this internal liquidity, we set price to feed them, then before we have that DSY coming down. So if we are looking for a pullback on DSY, then we're also expecting, so the first one we'll talk about now is GU. So GU, the same scenario that what we can see now. My main projection for GU is that we are bullish into this. These are weekly range. So these are weekly range where we are trading currently. So yes, from this high to this low is our weekly range. So, but where's our daily range now? Our daily range is this high here. So we are trading now between this and this. So these are weekly. So here is our weekly range, while this place is our daily range. So this is our daily range currently, as you can see. So where are we looking at for us to join the major bullish on GU? Is that price to come to 1.261, then we'll look for a buy opportunity from this region. So if we are anticipating that price should come here, then it means that pullback that we begin to see. But currently, what we can see now is we are ranging, and I don't love a ranging market. So I will bust GU in this way, and look out for a possible breakout from that bust. So I have this equal high that is here. Now there's this equal high that here, and price which stands as liquidity, and we also have this imbalance as liquidity. We have this major what I would call supply zone. This supply zone has not been mitigated since price left that area. So we have a higher supply zone above us, we have a demand zone below us, and we have liquidity above us. Our currently market is ranging. So what do we expect in this way? Two things is whether market break out from this range, retest, then price will come back to this low there. So from here, we can join the buying setup. And so if we look for a buy, possibility that price will come here is very high because liquidity is residing here, which we call external liquidity. So price will take it, then we can aim. So for me now, at cost of the end of the year, my projection for GU, if price come to this place, is that I'm projecting about 800 pips to the future on GU, 800 pips, maybe the next 2 to 3 months. So, but we need to see a very clear direction now before we pick a trade. Risk for now, there's no a good trade setup on GU. So all we are doing now, we are just ranging on this guy. So you can see even on 4 hours. So let's bust it in this way. Let's bust it like this. So we need price to do what? Two things. We need price to break out of this low. A momentum close. Then we can look for a reprice at the equilibrium there and sell. So that will give us a sell where we look for a buy here. So this is what I'm anticipating for GU. For now, there's nothing we can do. Price is ranging. As a teacher, I always advise stay away from ranging market. So that is GU. I'll talk of Euro, then gold. So we can have Mr. Jerry to share a view before you go on gold, so that we can partake in that. So GU, we are still in the same page. I'm looking for a sell opportunity on GU though. But so now GU, the GU is the inverse of DSY. Look at it. So when I flip Euro USD down, you can see this is the same thing that DSY is giving to us. So it means that Euro USD is the inverse of DSY. So that is very clear. So now, but the difference between this Euro and that of GU is that this high here, already we have a sweep on this high. So now, my overall projection for this guy is these are drawn liquidity, this high, right? So I'm projecting price to come here. But before then, there's a need for price to fill up this gap before the move. So we can title all these plays as our area of concentrations. And again, price has given on the head and shoulder based on chart pattern. We have left shoulder, head, we have the right shoulder. So this is a confirmation that there's tendencies that we'll see a buy from this zone that will push market up there. So one of the rules for trading head and shoulder is that as price break out the neckline of head and shoulder, price will tend to come back to retest. So we have not seen that retest now, which I'm anticipated for. So now this where we want to buy from. So can we look for a counter sell as price? So if I redefine this area from daily to 4 hours, so I will title this place as what? As a demand, because we have this imbalance here. So we are looking at Euro USD to settle this place. So that will now make us to analyze chart from 4 hours perspective, which is what we will analyze structure. So on 4 hours, what do you see? Number one, we see break of structure to the upside, right? Then we see another break of structure. This is the last lows that was standing, and this is the high. So where's our projection? So where's our 4 hours range on 4 hours? So this is our range. We are trading below that high and this low. This is our range now. So on 4 hours perspective, this is where, forget everything that happened here. All these things, they are internal break of structure, which I will not count all these places as highs. All these places are liquidities in making. So these are liquidity for me. These are inducements. I call it inducement, which is liquidity for price. So I'm looking at price. So this is the last demand, supply, sorry, that's caused break of structure. So I'm waiting for price to return to this place, then we can have this setback. So this is my projection on EU. I know somebody will say, can't I buy if I'm looking at to buy? Yes, if to buy, you see this place I mark, this will be an opportunity for you to buy to this place, maybe for a day trading something. And that, but now it's too high for you to buy. See, look at it. So when this shall be your buy, so look at it. So price has been coming down, a downtrend on 1 hour. We have this, but here we shift the market structure. So immediately we shift, what do you see? Price came back to retest the demand. This demand, you can see price touch the demand and it's buy. So there's a buy opportunity from this demand earlier. I think we can push that, we should be about 100 pips, push to that up. So this is what we can do now. For us to join this trade, we'll drop to 15 minutes. So we'll drop to 15 minutes. You can see the way I'm breaking it down from very to the least smaller time frame where you can see trade opportunity now. So now we have seen now that we have a breaker to the upside and we have some imbalances. So what we'll do is to use this demand area to look for a buy. So we can use this week now for a buy limit. So this is a day trading. So we do this way. So I can now call this trade now for day trading sake. So our stop loss, let's put it below this, which is 8 pips. 8 pips stop loss. Then let's go back to 1 hour and target the. This will give us a very good, robust reward ratio. So we can target, let's target this liquidity. Let's not target far. This will give us about 8 arrow. So on the Euro USD, so this just a quick buy on this buy limit. So this is just 8 pips, very tight stop loss. So even when you use your 0.01, if you lose it, you are not losing up to $1. So we have entry price as 1.07861. SL will give us 1.07775, which is 8 pips. 8 pips stop loss, right? Then we have TP. So TP we target 1.08594. So reward ratio, RR. So that guy will give us 8R, right? So that is it, guys. So this is first trade call for the week for a buy limit on Euro USD. Then, where we look for a clear sell above that place. So that is clear. So let's now go to gold now. Let's go to gold. Gold.
Hello, Valentine. Good morning.
Well done, sir.
Morning, everyone. Good
Yes,
morning.
sir.
I'm just looking at a possibility of one targeting. There's a high before that where you have your TP on that Euro USD. Some people can decide to target that instead of going that far. Yeah,
And
that's
this place.
yeah. If you come, yeah, yes, no, just a little above that, a little above for the TP.
Yeah, right.
Where you, yes, that zone. I
Okay. And that's also a good reward ratio. That will give you
Yeah,
6.5.
yeah, yes. Although price had tested there before, that's the last the previous high by the left was the second test of that zone. So there could be high probability that price will trade past that zone.
And
However, I still think that zone is a good place to target for some profits. Although, although from what we have here, price could go above that zone to take out the liquidity, first before dropping down. But that's a good place to take TP.
so traders, you can make your choice. Even some people, they don't even wait for TP to happen, so they just call their trade. So that is it, sha. It's a very good opportunity. And the other thing is, this trade, it may not come down here. So, but this is
Exactly.
the way to get entry. But what is setting up, we can see now it's creating lower low, lower high. So possibility that this trade we buy is very, very high. Then come to this place. So let's look at gold so that I can share his view on gold before we go. So gold now gold has been very bullish. Let me really share my own. So gold has very, very bullish, which we can see now that this guy, we have a break of structure here. Boom. That last break of structure after this. Gold is not even feeling anything balanced for now. So maybe all this thing balance will be filled in the nearest future, not now. So we can see now that, let me put it, creates a gap here on daily. This is a liquidity void between the closing of this candle and a jump. I only feel with weak. So let's go to 4 hours. So on 4 hours now, this is my 4 projection. So I'm looking at, you see this red candle here is the last, is a very strong demand that I'm looking at. If gold can come back to this place, that can be another great bounce. So when you look at, after this demand, everything here is like we have a balanced price actions. So this year we have this very big gap, though here this candle here, it quickly covered the gap. It quickly covered this gap here, but I still believe there's a need for price, and that's why you see that price came back, is returning here. Why? Because there's there's an imbalance that this will cover. So that place now stands as a support for price, and that's why you see price rejecting. So me, I was looking for price to come back here. So let's go to smaller time frame. We can see, okay. So on smaller time frame now, we can see that we have imbalance. Let's see, we have imbalance. So we can see from this candle now to this candle here, this candle here. So we have this 2 hours imbalance, and that's where I'm targeting this demand. So let's draw to smaller time frame where I defined my proper demand. So I'm just looking at now all these things, this is really demand. This red candle is really the demand. So for us not to miss out, we can use this 1 hour red candle as a proper demand that we'll be looking out for a buy opportunity from there. So that is where I'm looking out to. Price come tapping. So now price has given us, I love what price is doing currently. Price has given us liquidity. He has created liquidity here. So he has created an inducement. An inducement here already. So it's very, very good. I love what price is doing currently. So it will be very
So,
for
sorry,
price.
Val, I want to cut in again. Sorry
Okay.
for cutting. So that particular liquidity, that's the one that was created, I think, yesterday, the below there has created a liquidity there. So price may likely come down to take out those liquidity and fill this fair value gap, the fair value gap before we will have the other block. So that is may likely going to be the next scenario. A lot of buy orders will be sitting where you have your shaded silver shaded box, and then you have your risk, So this is going to be like a very good entry for those who may want to take the buy from that zone. And one thing about gold for the past few months is that gold has been very, very strongly bullish. So most of the institutional traders are looking for, or most of the big traders are looking for opportunities to join the rally. So, but they won't want to jump in at. So first, number one is that from the way the candle closed yesterday, we are having a strong bearish rejection that may send price to do more correction. Number one thing we are going to be watching out for is price filling up the fair value gap we have, just where you have your arrow, and then taking out the liquidity at that space and then tapping into the other block. That's number one. Number two, we could have price tap into that other block, bouncing back to where it is currently, and then gathering momentum to return if it wants to, if it may want to have a pronounced correction. And go back to the 4-hour chart as well. The 4-hour
Okay.
chart. Yeah. And we have so many imbalances or the fair value gaps that needs to be covered. So if price is going to make a more pronounced correction, we may see it going down heavily after it has reacted to this other block you plotted. That other block is going to send price back most likely to that high, or maybe break it if it comes to that other block, because a lot of people are looking at joining the rally. So that could be a very good zone where they may be positioning to join. However, we cannot take it out from price. Price may want to do a more pronounced correction, from that zone. So if you look at the 4-hour chart, can you expand? Can you go take it higher a bit so that we can see what's happening? Or maybe go to daily chart. We have some other. Yes.
The next demand on daily is this demand here.
Yes. Okay, good. Yes. So if price is going to make a more pronounced correction, that will be the next zone we are going to be watching out for. And then at this zone, I think the rally is going to be very powerful from here, going back up. Do you understand? So first we are going to be watching out for is we want to see how price is going to react where it is. Maybe the news that we have today, we're going to send it down to the other block you plotted, and then we can take our first trade from there. And then whatever action that we're going to have from the news or release we are going to have from the news, that will inform us on what we are going to do. That's all from me, Val. Thank you.
All right, sir.